And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, building expert advisors for the MetaTrader 4, MetaTrader 5 platforms, and just in general, becoming a better trader. And I'm sharing what I've learned with been becoming a better trader with you so you can become a better trader too and grow your money and grow your accounts. And at least that's the goal here. Sometimes we don't do that. I did not do that well yesterday. I had closed out some trades that I no longer have faith in that I should have closed out before. But then after the Fed, after Kevin Warsh's first press conference yesterday, it kind of changed the track of everything. And I am glad I did get out of those trades when I did, because it kept me from further losses and protected my account. However, my accounts, I should say. In my prop firm account, I do not have any trades in yet, so we're not going to be talking about that much today. But we do need to talk about risk, because there is the possibility that you're going to lose money doing this. As a matter of fact, if you trade without knowing what you're doing, you're definitely going to lose money doing this. Even if you know what you're doing, you can lose money like I do. But at any rate, that is not the goal. The goal is to make money on doing this, not lose it. But anyway, here it goes. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past, about 23 years ago. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. And so I think first order of business might be to do something unusual that I don't normally do. I'm going to bring Grok in over here. Now, I did ask... my typing's gotten really bad, so I did ask Grok to kind of summarize the Fed's press conference yesterday, or Kevin Warsh's press conference yesterday. Because there's been some changes. One, the FOMC voted unanimously 12-0 to hold the Fed funds rate. Steady at 350 to 375. But here's some things that are different. One, there's a major communication overhaul. There's no more forward guidance. So in other words, the Fed is not going to look at its crystal ball and say, oh, we're going to raise rates and lower rates and do this and 10. So forward guidance is gone. It's kind of unusual to see what's going to happen with that. And I'll show you something else in just a minute that I thought was interesting. So they're no longer going to be looking at their crystal ball and suggesting what they could do. Task forces are established. He's going to establish task forces to review strategy, tools, communications, and related areas. That's a hint that's saying he doesn't know what he's doing. One, and also the task force is just a committee to create another committee, which is just going to make it a slothy type moving object instead of organization, instead of something that's somewhat nimble. So we're going to see how that works out. Inflation stance committed to delivering the 2% target. However, for inflation right now is measured at, according to the Fed's website. So we will look at the horse's mouth on this. Let's look at the horse's mouth. Let's spell it correctly too. That always helps. Federal Reserve website right here. This is saying inflation is at 3.8%. Now, it's better than when it was up here at 7.2% during 2022, June 2022, which is the height of pretty much everything. And the bottom on that is going to be right around March of 2025. And that's when we have inflation coming back in. A lot of it is energy motivated right now. So we'll see how that works. There's a video if you want to check that out. But anyway, let's go back to here again. Comparison to Jerome Powell. Policy decision-making and economic view broadly similar, whatever that means. Rates are going to be held steady and mid elevated inflation. They can't raise rates too much because they're going to be raising rates on the massive $40 trillion in government debt that I think it's 40 trillion. Is that the number I'm looking for? Of government debt that is financed by the federal government. So they're kind of have their kind of Congress is busy bankrupting the United States, and the Fed can no longer do anything about it. I think that's also what he mentioned in here. He said the Fed cannot be held liable for various prices, such as energy, because when the Straits of Hormuz close, the world energy markets tighten up, and that drives prices up. And that's something that's well outside of the Fed's control. Style of philosophy. Warsh appears to be more enigmatic and political. That's, of course, due to, according to the ABC News, means he's going to be more evasive, more opaque. I see that word in here, and prominent dot plot, and means that the Fed is going to be more mysterious. How about that? On core monetary policy, the stance remains consistent, committed to the 2% inflation target while supporting maximum employment and growth. However, these are subtle hawkish tilts in projections and possible rate hikes later on in 2026. So let's go ahead and look at the CME Fed Watch tool. Let's see what it says. CME Fed Watch. It's right here. Let's see what they think is going to happen. Look at that. Normally this is like a 97-98% chance of things going on. Now there's a 63% chance of a hold in July and a 36% chance of a rate increase in July. So that's something else that's new and interesting. So we're going to see what just happened. Where did everything go? Oh, there it goes. I accepted the cookies. So that is something that's very new that's happening now. So we'll see what happens with that. That should add some excitement to our Forex trading days as we see what's going on. Well, enough about the Fed. Let's talk about me some more. Excuse me. And that is Henry, the Forex trading parakeet that you hear chirping in the background. First, let's go to my expert advisors. These are two that I have right here that are available on the open market. These is the Bollinger Band RSI Mean Reversion Pro and the Bollinger Band RSI Mean Reversion Pro for MetaTrader 5. First one's for MetaTrader 4 because it says MetaTrader 4 right there. And these are good. These are good. They do well. They do not trade as near as much as I would like for them to, but that's okay. I don't need them to overtrade, and they don't. But they do trade very well. I'm gonna have something pop up in just a second. See where it is. Let's just go ahead and close that out. That is my demo account, and it's hurting for certain. Not too bad. Lost $2,000 in the demo account, I think. But it's demo money. It's not really my money, so it's not money at all. Feel free to check these out. I've got more on the way as soon as I can get enough time together to put some more together. This is what we have here. This is tradingforexforprofit.com. This is my website that I'm building to help you become a better trader. They're coming to the dashboard right here. I'm already logged in, and you can check out your accounts right here. I need to update mine. Mine have not been updated. However, I'm also still building a thing too. So don't think, oh, it's too busy. It's too hard for him to update. No, that's not the case. The case is I don't have time to because I also have a day job. I'm not. When I do get to this full time, then it will be a lot smoother, and then I'll be working 16 hours a day doing this. That'll be great. I would love to do that. You can add your trades. Here's your trading journal. You can import your trades right here. We even have news down here, which I need to find out why then didn't update this morning. There's a glitch in there somewhere. I need to work on that. Check out your favorite Forex pairs right here. This updates, I think, hourly right now until I can get a better API source, which is very expensive. So what we're going to do is come up to here and check out the pricing. In order to enjoy this for yourself, you can come in here and check it out for free. Try it on, kick the tire, see if you like it, manage your account, and then check out the basic risk calculator and stuff like that. If you really like it, then you can bring in more of your accounts when you upgrade to Pro, and then you also have prop challenge tracking also, if you're a prop firm challenge trader like I am. And so that's something else that you can do. And then we have premium for the super pros who want premium news, scheduled news tools, and scheduled news tools. That's for me. I need to take that out. And all sorts of different things. And it does renew automatically. You do have a 7-day free trial. which is not anywhere on this page. 7-day free trial for paid subscriptions. So there's no risk. Check it out for 7 days and see if you like it. With that, let's go ahead and get into what we're looking at today. First, let's go back to Market Pulse here because I'm actually testing this right now too. Here's Market Pulse. So it's saying we got neutral, and here's the score for this. So it's neutral, minus 20 to 20, goes on a minus 100 to 100 basis. And it's saying that the USD is the strongest currency in the basket still, which is kind of interesting. Let me go back to dashboard, admin panel, show you behind the scenes, import RSS feeds, no Market Pulse. Let's run this again. Okay, so it's been updated. So we'll go back to here and see if this has changed. Still neutral, still USD on top. How about that? Let's go back over here quick. Now let's compare it to what we have over here. Risk on, risk off a meter. Yep, neutral. That's about right. Minus 12 is what I've got. That's what I'm showing. They're showing 53 on a scale of something. Not 100 to 100. I think it's 0 to 100 is what their scale is. And then let's look at they're saying, oh, look at that. Dollars number one, Aussie. Euro. Oh, look at that. Canadian. Euro, JPY. Euro's done here. Huh. Somewhat similar. So how about that? We've got the Market Pulse thing working very well. So I may be able to stop using this because it's all, I'm not sure what it's based on yet. I would like to get it more accurate, but it's, so the Market Pulse is working. Maybe I'll just start using that now. So with that, let's go ahead and get into what we are looking at today. Forex news right here. It's going to be a long video today. Let's see, here we go. We have the claimant count right here for that's people filing for unemployment has on the increase in Great Britain. We also have I need to be able to update this quicker too in Trading Forex for Profit because it's these feeds are astronomical. It's I found a feed that I can use for 400 euro. It's coming in from Europe, but it is I can't swing that right now. But at any rate, Swissy right here. Swiss National Bank Monetary Policy Assessment, they're holding. Then they had their bank conference, British decision right here. They held too. They probably did not have as near as much to talk about as the American, as the Fed did yesterday. Canadian, and then we have the USD Philly Fed Market Index and unemployment claims rounding out the fund for later on today. So with that, let's go ahead and see what's going on today. First, the US 10. The US 10 yield is down about half a percentage point. So that's not bad. The Japanese is right down here. And the reason why I do this is because the carry trade. I'm watching the carry trade to see if it's going to fall apart anytime soon, and it is not. So it's up. So they are converging a little bit more. When we come over here, I've got the convergence chart right here. Where'd it go? I had it set up. It's back. Well, I had it set up. Then the screen refreshed. Oh, well. So here we go. We have the US 10 up here, the Japanese 10 down here, and neither one of them are crossing yet. So the yen carry trade is still alive and well. Don't let anybody fool you on that one. So with that, we'll come back over here. And that's what I was counting on is in my losing trade was it's based on a fallacy, not a fallacy, a falsehood. We'll call it just a flat out falsehood that the U.S. yen carry trade is going to break down. It has not, so it's not going. It's going to the races still, especially with a stronger dollar. Euro versus the Great British Pound. Euro is taking over. And the pound is down below that, so that's something to consider. It looks like it's right at a resistance point right now at 86.68. We'll see if that continues. DXY, look at that. Kevin Warsh has talked us into a strong dollar again. So with that, we have huge upswing in the DXY yesterday, which is the dollar strength on that, and it pretty much destroys everything else. That destroys it, but you're selling everything else if this is the case. Except, or you're buying the dollar versus the yen and buying the dollar versus the Swissy, but the euro versus the dollar, let's look at it. The inverse. This is because the euro versus the dollar is 57% of the DXY, and it is going to take the biggest brunt of that. So it's a big pull down on that one, down to 114.64. Not as near as bad as 2022, and it went down into 96. So we're dealing with parity. Pound versus the dollar again. It's good on a weak dollar, on a weak US dollar, but it's not good on a strong US dollar. So it is coming down. We've got lots of dollar strength to talk about today. Swissy at the top of its game again. It could be challenging 80 pretty soon, or 80, 87. Could be challenging 81 pretty soon, which is a long-term high. Excuse me. Could not hit the pause button that time. Let's see. Have the dollar versus the. Thank you, Henry. Henry said bless you. The dollar versus the Japanese yen is right here at 160.94. I got out at 160.70. I was like, I've had enough. Can't see what's going to happen later because I've been trading this the wrong way. The way I should be trading this is on strong dollar situations, which has been ever since, since a long time. Ever since I've been in this game, ever since about 2011, it's been going up against the dollar versus the yen, and then you have these periods where the dollar versus the yen comes down. So the long-term trend, let's back this out to weekly for a second. I'll show you what I'm talking about. My long-term trend should be up. However, I've been waiting for this little bitty jump right now to these little things, and it's going to cost me a lot of money. So with that, we're going to stop doing that. So now we've got long-term dollar strength on that, and that's not going to stop anytime soon after the Fed stance yesterday. We're continuing to see rate hikes. Which should slow down inflation. However, it's not going to work well against the dollar versus the yen. This is going to be off to the races. We'll probably see 165 soon. So that is not trading advice. That's just my opinion. Pound versus the yen, 112.72. Look at that on pound weakness. 184.50 on euro weakness. Canadian versus the yen, way down on 113.96. And then we have the crude oil. NYMEX crude oil at 117 or at 117 at 72. Pardon me, 74.72. So that is down a chunk from yesterday and continues to come down. That is good news for everyone who has a vehicle, a car. That puts gas in that car. Let's see, dollar versus the CAD. 141.22. Yesterday I said it looked like it was going to be testing 140 pretty soon. There you have it. 140 we now have a new weekly high for that, and I don't know when we've had another weekly high this high, but if it closes higher than that, we're going to have a new weekly high. How about that? Oh yeah, never mind. Here it is at 145 right here for weekly high. So I'll draw this one in here, just so I can keep track of what I'm doing. A horizontal ray, I'll put that about right here. We call that it's January 2025. It wasn't that long ago at all. So we'll call it the January 2025 weekly high close. Okay, Jan 2025 weekly high close. Top right, yes, that's where I want it. And there we go. I'll go back to daily and see what's going on here. So we have a January 2025 weekly high close. Could be the next target, 145. We'll see. We'll see if dollar strength continues that long. That would be kind of cool. Be very cool. Let's see. Aussie versus the dollar, 70. Right at 70 proper. Much to my chagrin, I'm still actively involved in this trade. I would like to see it around 80. I'd like to see it around 71. Before that, the 80 would be great. Let's see, gold versus the USD down to 42.50 and holding. did come down to 40.64 before it found support there. So we'll see if it can hold at 42.50. Probably not going to the dollar strength that we have going on right now. Platinum down 4.3%. Palladium down 5.4%. Silver holding in there at 67. I like it. 67.60 is where silver's holding today. And let's look and see how the software sector did yesterday. Oh, it did not do well at all. IGV is way down here. HubSpot right here. Salesforce down 4%, Intuit down 4.2%, GoDaddy down 3.4%, Adobe down 5%. How about that? Finally under 200. Nvidia down 1.3%, and Upwork down 4.2%, and testing at lows right there, 4.66 or 7.66. We'll see if that continues. That'll be interesting. And then let's look at electricity real quick. It did not update yesterday because it's a monthly it's a monthly chart. It comes down from the St. Louis Fed, and it is holding at 0.2 at 20 cents per kilowatt hour. So that is a huge step up from 2021 when we had 14 cents per kilowatt hour, and before that, that's daily. That's 2004. Was all the way down to 9 cents per kilowatt hour. So power electricity is going up, and now it's going up by a lot quicker. So that's where your power is going. What's funny is I hear a bunch of state governments saying that now that they have created the high electricity problem, they're going to step in and help you fix it. So that's a big thorn. That's a big topic of controversy for me. Is that the state creates the governments create a problem and then jump in to try to fix it, and fix it with some ruse that ends up costing you more money. But at any rate, that's enough of that. That's about all I've got for today. We'll put this back on the DXY so I can concentrate on other things. If you like this video, then hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And lastly, something else. Oh yeah, if you want to talk to me directly, then hit me up in the comment section. I'll be happy to get back with you as soon as I can. So you guys have a great one, and I will talk with you later. Bye.